A very good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, it looks like we're all set to breach that 19,000 mark after the rally on Wall Street overnight, and therefore, I was curious to ask this question to Santo, and we thought that we should take it up in our spotlight section today. Santo, can Nifty hit 20,000 before the new year comes around?
See, when the answer to that, CJ, is that when people start extrapolating things, so far there was a lot of skepticism. 18,600 won't hold.
Yeah.
19,000 is definitely off the table. And now people are not even talking about 19,000, like you yourself has posed the question that will it hit 20,000? So that to me is a contra indicator, probably indicating that.
Yes, Santa, hold your horses. Let me first make my case, and then of course you can always bring it down, as you always do. But so my case is of course here. See, it looks the Eicher Nifty futures, if you look at that, they're already at 19,000. So it is very likely that by the end of this week, maybe by tomorrow afternoon, we may breach the 19,000 mark. That clearly the probability of that is pretty high. So that is out of the way. The next question, of course, emerges that we have an entire month in front of us. We know that market tends to give a Santa Claus rally because sometimes when there are a higher number of buyers, but the overall participation is low because of, say, FIs going on holidays, Christmas week, and all those sort of things, markets can give, extrapolated moves. And therefore, the question rises that maybe we could see a 1,000 point rally in December itself. Now, how that could work out? If you look at December, Santo, the past 10 years, barring maybe 1 or 2 years, it has generally given very positive returns. The average returns for the month of December are somewhere in the range of 2 to 3%. We have had great Decembers as well when the market has risen 4 5%, sometimes even 6%. So clearly, there is a historical trend here that December or the year end tends to be quite positive for Indian markets at large. Also, now what could be the drivers for this? There are three main drivers here. One driver came yesterday evening when US Federal Reserve Chief Jerome Powell was giving a speech. He was basically participating at an event, and he clearly has now almost cemented the fact that the Fed is now going to go slower on rate hikes. He said that it is probably the right time to bring back the quantum of rate hikes from 75 basis points that they have been doing for the past 4 meetings to 50 basis points in as soon as the December meeting itself. Also, the more important point was when he was talking about core inflation, which is the major metric that the Fed tracks to see where its inflation mandate is. He divided it into 3 segments of housing, services, X of housing, and food. And he said that out of 3, 2 were actually now giving signs of optimism as far as bringing inflation down is concerned. And that is the reason why we saw the sort of rally that we saw in Wall Street yesterday, with the Nasdaq index, tech index up above 4%, as S&P rallying about 3.5%. So clearly, it seems that Fed pivot that everybody has been waiting around is not that far. Yes, we are not there yet, but it's not that far. The second point is China. Now, we know that there is an ugly protest out there going on in China because people are frustrated with the zero COVID policy of the government there. And recently, yesterday, the head or the top official who is in charge for, the Chinese COVID policy, he sort of made certain comments that indicated that maybe the government is now looking towards softening its stance. He indicated that the Omicron variant that is currently leading the spike in cases in China is not as life-threatening as the previous variants are. And of course, they should have watched news globally, and they would have realized that was the case from the beginning, because in India also, in West also, when the Omicron variant spread, it did not lead to as many hospitalizations and deaths as we saw in the previous waves. So therefore, there is an indication that maybe China, by the first quarter of 2023, could be out of its zero COVID policy, and that could be a major kicker as far as the global economy is concerned. And lastly, RBI. RBI now, I think, is in a sweet spot, Santo, where it can decide that maybe it need not need to even raise rates. Some market participants are now saying that RBI does not even need to raise rates, given that the inflation trajectory now clearly seems to be under softening quite rapidly. So those would be the 3 things. And of course, we are heading into budget month next month. That tends to build up expectations. There are already murmurs around capital gains tax, possible revision there. Also, the Q3 earnings season will start from January. So there are enough triggers to take this rally to 20K by December end.
Well, CJ, one thing about the December factor, which you are saying typically market tends to give higher returns, but then let's not forget October is not supposed to be a good month, but last October, the last month was pretty good for the market. So something different can happen with December as well. But that apart, yes, I do take the point, CJ. Overall participation in the market is quite low during December because of the holiday season, and usually that's one reason why markets tend to climb in
the price moves tend to be exaggerated.
The other thing, CJ, is that if you read between the lines, clearly Fed Chair Powell has said that policy will continue to remain restrictive till the time inflation comes under control. So market probably, I think at this point, is still getting a little ahead of itself when it's already talking about the pivot, when so far what we are seeing is that continued rate hikes, even if it's not as steep as the ones which we had seen earlier. Now it's going to be 50 basis points, earlier it was 75 basis points, but as I've been making this point time and again, rates are still rising, and at some point they will begin to affect earnings. You're already seeing layoffs in many big companies at this point of time. It's a matter of time before they spread to the smaller companies as well. So there is some need for caution when you have that kind of large layoffs and cooling off of the labor market. Somewhere aggregate demand will be impacted, and that will reflect in the earnings, CJ. So it doesn't look like a dire situation at this point in time, but the euphoria which we are seeing right now, I think that probably is a warning sign to me, CJ.
I think, Santo, yes, of course, a lot of these factors are there, but we have been talking about these factors for a long time. So the market probably has already baked that in, factored that in, and maybe is just moving on to that, that phase where every bad news on the economic front becomes good news on the investment
and
front.
There are other indications also. So for instance, now the differential between the 2-year and the 10-year bond, that has widened to 0.78%. Now it can be interpreted either ways. Now this was last seen, this large gap was last seen 41 years back, and it was then followed by a recession. Now here probably what the market is saying is that it expects rate cuts going forward, and that could be the reason why you're seeing this kind of a gap. So it could be interpreted either ways, but there are some warning signs, and I think at this point investors are just willing to pay premium valuations. That could change in the months
especially
ahead.
in the case of India, because I think globally, if you look at global stocks, are not available at premium valuation. In fact, their valuations are as low as they can be, especially if you talk about emerging market equities, say a lot of the northern Asian equities, so that Taiwan, South Korea, all of these markets are really, really cheap right now because they were so battered. It's actually the Indian market that is the most expensive right now within the emerging market pack. So it'll be interesting to see whether India participates in this rally as much as we hope that it will. That said, moving on to the trade setup of the day, and clearly it's a very strong setup this morning. If you look at the SGX Nifty futures, they're indicating almost a 100-point move on the Nifty on the upside. Clearly taking cues from Wall Street, where benchmark indices saw a very strong rally after the comments that came out from Fed Chair Jerome Powell. Market really largely interpreted those comments dovishly, so clearly that is a good indicator. Another indicator of that was, of course, the US bond market, where the US 2-year treasury yields slumped as much as 25 basis points in a single day. That is a very, very rare move. I'm pretty sure that is at least a 2 standard deviation move, and that does not happen that often. And also, very crucially for EMs, the US dollar index slumped below and closed below the 106 handle for the first time in a very long time. So clearly, a lot of the macro setup, at least also Santo, is turning favorable for risky assets like emerging market equities.
So I've been chatting to traders, and what they tell me is that activity levels are pretty low, even and volumes are not all that much. Typically when the market is rising and you're seeing this kind of a move in Nifty day after day, that has to reflect in the turnover, that actually is still not happening. So overall it remains a lackluster market, the kind of market that we had last seen in about 2010, when you had the index rising, main indices rising almost every other day, but overall volumes in the market were quite low. That said, a quick check on FNOQs this morning. We're seeing long build up in futures of motor companies Ashok Leyland and TVS Motor. There's some short build up being seen in Voltas. Now the stock has been on a downtrend for quite some time now. Canara Bank, again this has been compared to the overall bullish trend in PSU banks, Canara Bank has been a bit of an outlier. This stock too has been under pressure of late, and we are seeing short build up there as well. Also ABB, which had a good run up till recently and now has been drifting lower for the last few days. Short covering being seen in futures of IGL and Bajaj Auto.
Well, thank you for the cue, Santo. Moving on to the newsmakers of the day, and the first stock on my radar would be TCS. Now, a good news coming in from the company, as in they have won a major deal in the UK. They have been chosen to create the UK's rail delivery platform. That is a government, basically a government order that has come in for TCS, and it seems to be a major, large order for the company. And I think from a sentimental point of view, clearly this deal win will add to or boost confidence in the growth outlook going ahead and the deal winning pipeline going ahead for a company like TCS. It's an interesting thought. Santo, while reading about this deal, I was wondering, that generally UK government, of course, is a big source for projects it has been a big source of projects for a lot of IT companies. And it got me thinking that given that now Rishi Sunak is the Prime Minister of UK, and given his links and to Infosys, whether it would be possible that to avoid conflict of interest, maybe other IT companies, Indian IT companies, may think that they have a better shot at getting a lot of the government contracts in the UK compared to an Infosys at this point of time. And just a a random thought that came to my mind. And that is why, but that aside, clearly this deal win should be very positive for TCS stock.
Well, ABB is the stock on my watch list in the newsmakers. Singapore-based Integrated Core Strategies has sold about 1 million shares of ABB in the open market. Stock, as I mentioned a short while back, has had a good run. Overall, the numbers have also been pretty decent, both for the June quarter as well as the September quarter, but some kind of fatigue now beginning to set in, and it looks like some of the investors who made decent returns in the stock over the past few months are now beginning to take some money off the table.
Well, moving on, Santo, your top brokerage bet of the day, and
Asian Paints, and this is something we have always sparred on in the past. Jefferies has a neutral rating on Asian Paints with a price target of 3,365. Now, Jefferies' key arguments. The company has reported strong volume growth for many quarters now.
Yeah.
That was partly because there had been a lot of pent-up demand. Now, that pent-up demand appears to be normalizing, which is now being reflected in the numbers also. We saw that partly in the September quarter numbers. That aside, according to Jefferies, margins in the decorative segment, now they could be range bound for a while. Let's not forget, competition in the segment is now intensifying with the entry of Grasim. And lastly, valuations at about 60 times estimated FY24 earnings. The valuations provide very little room for upside, CJ.
Well, Santo, the brokerage note that stood out for me today came out from HDFC Securities recently, and it is on a company called PDS. Now, it's not a relatively well-known company. It's largely involved in a textile space. Basically, it provides manufacturing and design solutions to a lot of textile manufacturers and apparel companies. So that is the a buy call coming in from HDFC Securities with a target price of about 383 for the next 2 quarters. Now, the argument that HDFC Securities has given is that they believe that the company is set to see very explosive growth going ahead in the coming years, driven by innovation. So now PDS has invested quite rapidly in their platform to create a platform for providing manufacturing and design solutions to customers not only in India but abroad as well. And it seems like the past 1.5 years they've been seeing a decent amount of traction there, and this platform is expected to be the next trigger of growth for the company. PDS itself is aiming to achieve a top line of about $2.5 billion over the next 5 years, and HDFC Securities believes that the company has a good probability of achieving that target, and that is one of the reasons why HDFC Securities is seeing a very strong upside of more than 20-25% on the stocks over the next 6 months.
And with that, let's move on to the stocks on our watch list this morning, beginning with Eicher Motors. Again, CJ, long-term investors could breathe a sigh of relief after recently the stock, well, the market has opened. We'll get back to you in a short while. A quick check there. The Nifty has opened 104 points higher. It is now at 18,859 points. Very strong market breadth this morning. 1,700 stocks up and 200 stocks down. We are seeing strength in the NSE mid cap as well as the Nifty Bank, which both are up by a little over 0.4%.
Yeah, Santo, sectorally also, the entire market is right now in the green. The Nifty Bank index Nifty IT index, of course, the top gainer, up about 1.2%. Natural, given the rally that we have seen in Nasdaq overnight, that generally tends to have a positive rub-off effect on Indian IT companies as well. Nifty Realty Index down up about 0.6% after very strong report coming out from performance update coming out from Suntech Realty earlier this morning. And Nifty Pharma Index also finding some traction, higher by about 0.5% at this point of time.
Well, and the stock on a watch list, Eicher Motors, CJ, the company has had a good run, but again, now there seems to be some signs of fatigue setting in.
Okay.
The second quarter numbers, were decent, but according to Kotak Securities, the festive season demand which you saw for the core portfolio was still not as high as what the company had witnessed during 2018 when demand was very strong.
Okay.
Now, its recent launch Hunter 350 has been a success, but there are two issues here. One is that it also seems to be cannibalizing on the core portfolio,
okay,
according to Kotak, and besides, because of the price hikes over time, there is also a bit of an issue with affordability as far as Eicher Motors bikes go, and this is also being reflected in some kind of pressure in some of its key markets like Delhi and Kerala. Besides, Kotak has said that we are seeing some signs of demand saturation in the 250cc segment.
Well, Santo, that is interesting given the fact that, Eicher itself, after, during his earnings con call did refute charges that there was any cannibalization happening in other portfolio of its Royal Enfield products, because they said that generally, of course, they highlighted the fact that the Hunter 350 has been a very good success, and probably that gives them the confidence to continue the launch pipeline that they have been, talking up since April this year. And one of the reasons why Eicher has seen such a big rally this year is one of the better performing automobile stocks this year is largely that the earnings growth outlook for the company is finally turning around after almost seeing a weak outlook for 3 years. Now, during the pandemic years in 2020 and 2021, Eicher's outlook was largely affected by the shortage of chips. Because of the semiconductor shortage, the company was not able to fulfill its production responsibilities, and that had led to a decline in earnings. Clearly, that issue has also sorted out. It seems sorted out almost 90-95% of the way for Eicher Motors. Now, I think, Santo, as far as demand saturation is concerned, Eicher actually is trying to get in new customers. Now, at one point of time, the 350cc segment, the classic Bullet, was seeing a little bit of saturation in key markets. But with the entry of Hunter 350, clearly the company has been able to bring a lot of new customers on board. The first-time buyers, in its portfolio has jumped from 13% to 18% because of Hunter 350 retro and metro models. Also, the company has indicated that they are getting more demand for metro model, which is a premium, model of the company, than retro model. That basically holds good for the premiumization that the company or a lot of people in the market bet on for Eicher Motors. Now, realization did fall 6% on a Q-on-Q basis in the second quarter, but the company's expectation is that because of them selling more metro Hunter 350 metro motorcycles going ahead, the margin should recover quite healthily in the third quarter and fourth quarter. So overall, I think given the launch pipeline and given the the demand that we are seeing, the spike in demand we are seeing, I think the situation is not as bad as Kotak seems to believe.
Well, we'll see that in the December quarter numbers.
Absolutely,
CJ.
absolutely. Moving on, the stock on my radar today would be relatively small cap, mid cap, infrastructure company. This is Likhitha Infrastructure. Now, the stock is likely to be buzzing today in trade, and it was actually doing so yesterday as well. But now the trigger is, is front of everybody. The fact that Ashish Kacholia has picked up a minor stake. Now, we all know he's a famed value investor in the market with a big name, a celebrity status. So clearly, with him entering the stock, this is going to be a very interesting ride ahead for Likhitha Infra. Now, the stock is a play on the pipeline, space, the pipeline infrastructure space for oil and gas companies that generally tends to provide. Its customers include almost all of the major city gas distribution companies in the country, as well as oil producers and gas suppliers as well. Now, I think this is also, Santo, a part of a larger trend wherein we are seeing some of these HNIs now becoming interested in business to government, or government to business or business to government sort of companies. Now, generally for Likhitha, its customer will be the government, because most of its customers are PSUs or the direct central government. So therefore, there seems to be, because of the government's own push on infrastructure projects, own push on capex, I think there is a hope out there in the market that a lot of these B2G companies could be in for a good run. I think that is one of the reasons, because there is a second stock that Karsholia has entered, which is involved in the B2G space in the past 3 to 4 months. And currently, the company has about ongoing pipeline projects of about 1,000 kilometers. So clearly, the order book for the company also is quite strong. And it will be interesting to see how the stock performs over the next 2 to 3 months.
CJ, I for one would not set store by big investors entering into a particular stock, because you always see them enter, but rarely do you see them move out. So that is that apart. But on the whole, if you have to look at the fundamental side of the story, definitely demand for gas in this country will only increase in the years going ahead. So from that perspective, very clearly, Likhitha is in the right spot. And again, you mentioned the order book position of the company at about 1,000 crores. That's also pretty robust. And I was just noticing that for a company which is largely in the infrastructure space, it's got almost no borrowings. That is now strange. Only quibbles is that fairly high receivables, which is partly to be expected given that it's operating in the government space. Absolutely. And also working capital days are slightly higher at about 144 days. Well, last talk on my watch list this morning is CCL Products. Now, this is a company which is into the production and distribution of coffee. The company has reported very strong second quarter earnings, almost 51% increase in revenues, and largely driven by a 20 to 25% increase in volume growth. Now, two things here. One, the company has been able to acquire a lot of new clients, and secondly, a lot of coffee processing activity has shifted from Europe because of the Russia and Europe, because of the war and also the high energy prices out there. Now, much of it has shifted to India and Vietnam, two places where CCL Products has got a very strong presence. Now, the company is aiming to make branded products, about 60 to 75% of its overall revenues by the end of FY24, and at present, the branded business is PAT neutral, but that should hopefully change going forward. According to Moneycontrol Pro, the valuations are little expensive at this point of time, but they are clearly justified given that CCL Products has been growing above industry average through addition of new clients also, besides innovative productive technologies. So given that factors, CJ, the recent run up in the stock seems to be justified.
Santo, yes, I take your point that of course the earnings performance has been quite good. Overall, international coffee prices had been very strong the entirety of 2022. But recently, I think in Q3, there has been a change in trend, largely because of very favorable weather patterns in Brazil. Coffee production there has been surging, and it is leading to a sort of a correction in international coffee prices at this point of time. So clearly, I think while Q2 and Q1 were quite good, I think there could be an impact on realizations as far as Q3 and Q4 is concerned for CCL products, because with coffee production coming back in Brazil in a major way, I think the supply demand dynamics within the coffee market will change quite rapidly in 2023, and that could possibly bring down coffee prices in general, because coffee prices have been very strong the entirety of the pandemic period from 2020 to 2021. But I think now with supply coming back from Brazil, I think this situation could turn around. So that will be my only caution as far as CCL Products is concerned. But in general, of course, the company is benefiting from the higher consumption of coffee in this country. It seems like we are becoming a country of coffee drinkers than tea drinkers that we traditionally used to be. So clearly, from a longer term prospect, this is a very good company in that sense. But in the near term, I wonder what impact it could have, the decline in international prices could have on CCL's margins going ahead.
Well, and unless we have any questions this
morning.
Yes,
Santo, we do have some of our viewers who want to know our thoughts on the the reported acquisition of Bisleri by Tata Consumer Products, whether that could be beneficial for the company, what could be the implications of that acquisition. Now, generally, of course, it is a big deal. If I'm not wrong, Tata Consumer is looking to spend about 6,000 to 7,000 crores on that deal. So clearly, it seems like the new CEO Santo is taking the acquisition route to build a portfolio that could be comparable to the other FMCG peers compared to doing it in an organic way, which could probably, of course, be a little time consuming. Now, on face value, I think this looks like a decent deal, but I'm just a little worried as to how they will scale up this operation going ahead, because while Bisleri itself is known for its drinking water, it has been facing competition from the unorganized sector. There is, of course, a lot of illicit advertising that happens utilizing his own brand name. There is a huge, humongous unorganized market here, and there I think Bisleri has been losing market share a little bit over the years. So the company Bisleri, prior to the acquisition, had big ambitions of becoming a larger company. They were getting into soft drink spaces and all those sort of areas. But I think going ahead, it will be a little bit of a challenge as to how Tata Consumer will be able to scale up. Of course, they have the ability to do it, but can they do it without breaching the cost dynamic is what would be very crucial.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching and also sending in your queries.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's trading action. Till then, have a great day.